Good afternoon, everybody. Thanks very much for joining us here at the International Investors Lounge at the Insight stage. We're going to be looking here at real estate trends, what's driving capital and investment, picking up on some of those trends and how we're seeing those and how they're influencing investment markets. It's 30 minutes. We're going to pick up on a lot of topics in a short space of time. But let's start with introductions. My name is Richard Betts. For those who don't know me, I'm co-founder and head of content at Real Asset Media. And we are delighted to be collaborating both with MIPIM, but also the home of Holland here, bringing international topics to MIPIM to discuss what we're seeing in the market at the moment. Let's start with you, David, and then we'll work our way down. Quick introductions. Who are you and what do you do?
Thanks, Richard, and thanks for the invitation. Nice to be here. My name is David Inskip. I lead the European research team at CBRE Investment Management. So CBRE Investment Management, one of the world's leading real asset managers with more than 150 billion of AUM globally. My team's role there is to guide investment strategy across all of our European products, direct, indirect, and listed.
Great. Petra.
Hi, good afternoon. My name is Petra Blazkova, and I'm a head of research and strategy at Catella Group. I'm helped to manage the strategy of their portfolio of about 14 billion euros in Europe. We mostly invested in residential, but obviously we have exposure to some of the other asset classes, pan euro. So yeah, look forward to this discussion today.
Great, thanks. Alexandre.
Hi there, my name is Alexandre Grellier. I'm the co-founder and CEO of a company called DROOMS. We are running a due diligence platform which is European-wide active with more than 250 people in 8 different countries, and we are mainly taking care of all kind of due diligence services with regards to the transaction side of the real estate business, as well as of all kind of due diligence on the platform side. I'm looking very much forward to the discussions here as well.
Great. Let's kick off with the macro side, what we're seeing there. Maybe let's start with you, Petra, just in terms of macro and I guess the economic climate. We'll pick up a little bit on the geopolitics as well, but what are you seeing there? Where are we at the moment in the market?
Extreme levels of uncertainty is probably very shortly how I would summarize it. Like we see this week how quickly the oil prices are volatile from, I don't know, 83 to 120 US dollars per barrel. So it just is quite a signal to us that the volatility and uncertainty is there in the economic space. We potentially facing some risks when it comes to inflation, looking at some of the most recent conflicts. So yeah, the economic growth is uneven, it's fragmented, and it's quite uncertain, unfortunately. Yeah, we were coming to MIPIM with a slightly different narrative, but I'm afraid it has changed quite quickly for us.
Okay, good. And David, what's your sense of what that means? Whether we're looking at interest rates, whether we're looking at a different, I suppose, view in terms of risk reward, risk from Europe, let's say, versus the Gulf states versus other areas. How do you see it playing out, I suppose?
Well, I suppose, firstly, we see the drivers coming through to real estate as being different through the last cycle. So all of that uncertainty, that volatility, that's been feeding into higher long-run interest rates. They're going to bounce around more than they did in the past, and they're going to stick at elevated levels relative to the last cycle. So we're not looking at really significant yield compression being a driver of real estate in Europe or really anywhere in the world. What we see, though, is that the occupier markets are performing really, really well, and that's especially in Europe, actually. So in Europe, if we think about the indices of prime rents right across the commercial sectors, growing at about 6% year on year, and that's been the case now for about 18 months, much well ahead of what we see in other regions of the world. So the occupier side doing a good job of driving performance overall, and actually a bit of a differentiator for Europe when it comes to comparing to the other regions.
Okay, good. I wanted to pick up a little bit what we're seeing, in terms of the market when we're looking at the way forward, I suppose. And Alexandre, just coming to you in terms of, I guess what we're seeing in terms of market direction? I know you do a real estate trends report every year, which looks at what's happening in terms of your clients and how you're seeing at that. So what are you seeing in terms of the market going forward, transaction speeds, those kinds of things?
Well, actually, we look at the trend on the data room space, and we look at the duration, and that's interesting because there's a correlation between a duration of the usage of the data room and the global market aspect. So what we figured out is that the duration of a deal is taking more and more time. It's taking longer and longer. We had an absolute peak last year with more than 368 days in average. So there are some regions being much higher, like the UK, for instance, and others who are slightly below. But what we saw now in 2025 is that this increase of time has stopped. We are seeing a very, very slight decrease, maybe a little glimpse of hope at the horizon. But so far, I mean, it's like always when you think that there is this little slice of hope, global political things are kicking in, and now let's wait and see what's going on.
And Petra, in terms of that kind of market sentiment, but also transactions, I mean, we could do a whole 4-day conference probably on what's happening in terms of, politics. But let's move beyond that and see what that actually means here. I mean, so what does it mean if we're looking at real estate? Do we think we're going to get an uptick in transactions that we've been expecting for 12 months? So what's your sense of it?
Yeah. I mean, sentiment is, and I'm sure we see it all here, the sentiment is picking up, even though a little bit quite slowly. And it is fair. We have to be quite careful and risk averse in the current conditions. But when you also look at the investment transactions, what has been actually dealt and traded, the weakest year was 2023. And since there is that slight and gradual recovery in terms of how many assets are being traded, how big the deals are. So there is the slight improvement taking place, but it's very, very slow, I'm afraid. But there is a positive upside to it for sure. Yeah.
Okay, good. And it would be interesting to get, I don't know whether there was any comparative between different countries in your analysis, and then I'll pick up on your research as well, because I know you recently did your house view. In terms of the different countries, was there variations if we're looking at transactions between UK, Germany, for example?
Well, as I said, the UK had a pretty raise of time. Things are taking much longer. So we were surprised to see that. The outlook was sort of not very positive when we did the trend report, versus Germany, which was at a top high as well, with more than a year of duration, where the outlook was slightly more positive, where they said investment is coming back, especially in housing. We see a lot of new potential coming from housing. We have a little bit in the how do you call that? The shopping malls and stuff like this, where you see slightly more investments coming, but it's still very, very slow. It is slow. It stays slow, and so it's like what we hear is that there's no flow. You have some things which are going on, so hence the last quarter was pretty good in Germany. The fourth quarter 2025 was good, but it's it was just a little increase, and now that's what we see.
Okay, good. And Petra, you obviously released your house view, which is picking up on things which are beyond geopolitics in a way and driving down. So it might be good just to highlight some of the key elements from that. What were the key trends that were coming through for you?
Yeah, I mean, I would call the house view defensive positioning, right, in the current environment. And then you have to start to think, and in the house view, we're trying to offer some practical investment solutions to the investors and market players who are early movers. Because I think in many ways, we've been saying it for a few months now, that it is probably the good time to invest now. It's a good vintage. It should actually start to reflect quite in better returns. But I think you still have to differentiate when you think about the practical solutions from the really structural ones, which is the housing, which would be operational living or anything related to the living, which we all know is quite substantially chronically undersupply. And then when you move more towards the tactical opportunities, when it's, we quite like retail too, retail parks or retail boxes, but also the CBD offices, that we're starting to see some opportunities there as well. And the mix and logistics kind of sits in between those, the retail and offices as also quite a tactical opportunity, because market has been through quite a boom lately, so we need to be a little bit more selective when it comes to logistics as well. So it's all the way from the structural to tactical, but it's selective, quite selective opportunities throughout, yeah.
Okay, so those are driving some of the investment strategies, let's say, at Catella. And David, from your point of view, I guess, how do you see those? And also, I'd be interested to pick up from the kind of research that you were doing there about what you see in terms of capital flows, what sort of capital is looking particularly at Europe, what's the capital doing?
Okay, so I guess firstly on the strategies, in complete agreement, uncertain times and also opportunities across all of the sectors. I think we'd almost go so far as to say that we're sector agnostic at the moment, and we see opportunities across all of the sectors, but it's very market and asset specific. We're very focused on where there are pockets of strong demand meeting a lack of supply, and that's driving income growth. In terms of the capital flows, there's, I would say, still the hard data and then the anecdote. So what you see actually across broader financial markets is that we're coming out of a period where it was really all about concentration. You had US exceptionalism, but within that you had the Mag 7, and now you have AI. And actually that's not really working like it was before. So things are becoming much more about differentiation. And we really do think that that will feed through into real estate as well. And anecdotally, we hear stories, not so much from the US, but from, say, Canadian investors, Australian investors, that the marginal dollar or euro of money that they were going to invest is probably going to come to Europe rather than the US now. So we don't yet really see it in the hard data, but it is something that we think is coming.
Okay, and do you know what type, it'd be interesting to know, what is that capital looking for? Is that core? Is that value add? Is that, what are they looking for?
It's a mixture, but I would say predominantly it's slightly higher returning strategies, a little bit outside of core. There's not a real conviction there for why core in Europe is suitably outperforming core in other places once you've accounted for currency and all of those other risks that you have to take on. So they are looking for, somewhere between, I would say, a core plus and a value add type return.
Okay, good. And Petra, is that what you're seeing as well in terms of the capital side? Who's investing what they're looking for?
Yeah, I wanted to contradict that a little bit, because I work with INREF quite a bit as well, and looking at some of the investment intention surveys that came out in January, they would argue that US investors are predominantly going to stay at home, actually, which is a little bit surprising.
US investors?
US investors, yes. Currency plays a role, obviously, and they have a big domestic core market which they can concentrate on. So in our view, we're not going to see many of the US actually groups coming in at the moment. So it's becoming a little bit more domestic for the European investors when it comes to actually finding the opportunities, because you have to be so selective and understand the location and your assets so well that it's really important to be on the ground ultimately.
I mean, on a broader scheme, though, you would guess, I would think, that money that might have been targeting Gulf states at the moment may not be, and will re-look at that allocation. And potentially, if investors outside are not looking so much at US markets, maybe Canada, but then Europe should be a net beneficiary, you would think, from that.
I'm sure we all agree on that, that Europe is actually, and it's to your point as well, that Europe is in a good place from the income perspective. That undersupply that we all struggle with in many ways is actually a beneficial for European real estate, because we can generate quite a good income on assets because it's hardly ever oversupplied here. Yeah.
And you mentioned digitalization, Alexandre, as well, and you were talking about AI there. So it'd be interesting just to get your sense of, because there's things like data security. There's to do with where, there's a whole critical infrastructure side around data centers that we've been talking about over the period here at MIPIM. So how much of an influence is that going to be if we're looking here at Europe?
Well, that's a good question. Today, if we look at the large language models, they're either coming from the US or they're coming out of China. There's nothing in Europe which is significant. So what we do is we are using we're using models that are produced somewhere else, but there are now two ways of using these models. There's either the way where we say, like, we don't care about GDPR, we don't care about where my data goes, or we want to keep our data, we want to keep it, we want to keep it in Europe, we want to keep it with the owner. There's the word is digital sovereignty, and then you will not be able to use these big models, which might bring you somewhere. So you are forced to play with European players who have their models and who are running their AI. But that's only half of the truth. The other part is that the AI models are doing a good job, but they are not yet perfect. So we need to control the results which are coming out of that. And this is something what people tend to forget. It's like today everybody believes that AI is just it's just a magic thing for everybody. But we still have the issue in Europe, and that's the part I know best, that neither the processes are really in place, nor the base is correct. So if you don't have valid data, then any kind of analysis, even if it's AI driven, would be wrong. So and therefore we are really pushing our customers, pushing the market to work on their processes and to work on their data.
So this is going to be a major trend going forward.
Absolutely.
Okay, good. And I wanted to pick up a little bit, I suppose, on demographics being a huge element. So that's got to be driving a lot of focus on operational real estate, particularly if you're looking at the living sector, all the way from student to senior to healthcare. So how do we see those? Ultimately, is that what's driving the living sector? This demographic change that we're seeing in Europe?
I mean, Europe is aging, point one, but also we see that the migration into the city, so the urbanizations, it's trends which have been around for a really long time. So obviously, the operational living and the way how we use the real estate when during our daily lives is changing, and I think the important trends that will start to affect the housing is the flexibility. So people want to have shorter leases, more ability to move, smaller units is another one. So that's leads to co-living and some of the other forms of micro-living or flexible living. I think student housing we will have to be a little bit more selective, especially to what's happening in the Middle East, and because lots of the student housing will depend on international students, and it's quite a cyclical and quick market when it comes to the student housing. So I would be a little bit more careful in the next school year. But the ultimate winner there is obviously the senior housing. I think there are models and suggestions that some of the UA population predictions might be needed to be escalated, that Europe will reach the peak of population not in 2080 but 2050, and then the population will start to actually decline around the world, and Europe is obviously on the leading end. So the senior housing and how we deal with the seniors will be a big part of all the real estate industry overall. Yeah.
Okay, I obviously need to encourage my children to start having children. That's obviously what's needed. David, what's your take on that? Just in terms of, I mean, Petra's there talked about, some of what would have been regarded as alternatives like senior living. How's that seen from a CBRE IM perspective? Is that too far in one direction of alternatives, or how do you see that?
No, I'm in broad agreement with everything that Petra's just said there. I think maybe just to add a bit of nuance around how we see some things, a big focus across living at the moment is affordability, and thinking about how broad you could keep that tenant pool. And I think people are only really coming to apply that to student accommodation now. So where we look for opportunities is probably less in the prestige institutions which have relied on students traveling from a different region of the world, not even from a different country. And we think students will become more focused on sort of the value of what they can get out of their university experience. So that's kind of shifting how we think about student accommodation. And then when you think about the older population, I think you have healthcare where demographics will probably feed through quite mechanically in some cases because it's very necessity driven. And then you have the broader senior living where actually there's still a big element of choice there. And then you run into cultural factors across different markets because a lot of people are getting older doesn't necessarily mean that a lot of people will go into specialized senior living, because we see in some markets that actually there's a real reluctance to do that.
Okay, good. I want to pick up a little bit on the financing side. Where are we in terms of equity capital, debt capital? In general, have we got the liquidity that we need in Europe in order to hopefully begin unblocking the transactions market again?
So I'm happy to start on that one. So I think actually what we've seen is that the debt market conditions have improved considerably over recent years. So obviously we had the shock to interest rates, which pushed up debt costs very significantly. We've then had a general easing of the swap rates coming back down. And what we've seen over the past year is that for good quality assets, actually the margins have really come down as well. So we've not really seen the availability of debt as a constraint. We're also seeing that on the equity side, capital raising is coming back, but it's not at the levels of the end of the previous cycle by any means. And then I think there's also the issue of policy and regulation, because that can be a hurdle to the capital coming in and being deployed in the way it needs to, especially across the living sectors and addressing those housing shortages.
Okay, good. Petra, what's your take on that?
I agree. I think we had over 6 months of stable interest rates, so the debt is it's much easier to underwrite now. It's a bit more predictable. You can start to see that it's accretive to returns again. So in principle, it's another of those elements why Europe is looking actually relatively good from the global perspective as well, that we have a bit more predictability when it comes to how you can finance your future investments. But yes, I agree that it's there, it's available, but also quite selective. And again, the banking industry is very much aware of how sensitive the real estate markets are at the moment, and then the individual assets you need to be quite careful. Far more data required when it comes to asking for loans, asking for debt on the new projects. So the data-driven element is coming even through the financing for us as well, and we see it on a daily basis.
Alexandre, let's just pick up with you. Anything on that financing side, but also I'd be interested to get a perspective on how we see things like the defense spending. You mentioned digital sovereignty as well. How much of a driver is that going to be? Because we've seen, a huge package put in place in Germany, for example. So any thoughts around that would also be interesting.
Well, actually, to come with regards to the financing part, what we see is that the demand of the financing institutions with regards to data has become excessively more intense. So it's really and the duration actually has picked up as well. So the credit, which has been performed within a couple of weeks in earlier days, it takes roughly 6 months today, because the intensiveness of due diligence which is going on there has significantly increased. And that is a trend that we see, and the demand of really more and deeper documentation there's a bigger taste for that, and so it's more complicated to get to the financing today, I would say, from our perspective.
Let's end on this point, which is, I suppose, if people are looking at the markets, what the key trends are, what they need to be thinking about in terms of investment, where do we think we're going to be looking in 6 months' time when we're at Expo, and where do we think we'll be looking in 12 months' time when we're back here in Cannes? Who wants to start? You didn't say yes, but I took it as a yes.
Well, I think in 6 months, much the same. I think it will be a much broader, if anything, focus on income growth. I think that will just be the overall arching narrative, and realizing that there's a real need to be really, really granular in the way that we think about markets. If we go a bit further ahead, so let's go 12 months on, I'm going to make a very brave prediction, given that I'm the only one from London here, but I think Germany will be firmly back on the radar in 12 months, because at the moment there is still a heavy degree of caution that comes with that market.
Okay, good.
I agree, obviously, living in Germany at the moment, but I think 6 months' time, I think we will be talking a lot about inflation at Expo. And in Europe, the inflation is actually not such a bad thing in real estate. You have indexed leases, so it might help to drive a bit of that income, but it will be a lot about what has happened in that period over summer with inflation. In 12 months' time, I suspect that we will be doing better than we are now. There will be lots of residential development starting this year. There will be a bit more or less pressure on the housing. Lots of the investors and developers are really stepping into that housing sector. So I think, lots of residential deals will be talked about the next MIPIM.
So the predictions are always a very difficult thing, as we all know. It's like if I look 6 months forward, or let me start differently. If I look 6 months backward, and you would have asked me 6 months ago, I would not have predicted what we have today. So it is really difficult to say what we're talking about at Expo. I believe that we need to have a massive review of pricing and the pricing gap from bid to ask, which is still there. And so I said it already last year and the year before, there must be the correction of the market, which still didn't happen at the extent that everybody was expecting. So maybe that happened, and then we will have a fresh start, a better start, and things will be far more positive than they are perceived by some of the players today.
Thanks very much. And I did 2 sessions on Germany, one yesterday and one today, so I wish I'd had you on those, because everybody was being quite gloomy about Germany. I was saying, but why are you being gloomy about Germany? Because yeah. So no, I'm delighted to see, and I'll keep that in my mind, David, for next time. Great, really interesting to pick up on those. 30 minutes. It's not a lot of time to look at the key trends driving this market, but fascinating to get your views. Thanks everyone who was here. Thank you if you're watching live and on demand, and look forward to checking those at Expo Real and at MIPIM next year. Thanks very much, everybody. Thank you.